TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. This is Larry Pesavento for Commodity Hour at TFNN. If you have any questions, it's 877-927-6648, and we have several segments of the show. The first segment, I want to talk about the precious metals and the XAU and the gold bug index, and then in the second part, we want to cover the soybean complex and some of the grains. And then towards the end, we will do the stock indices and the bonds and stuff to, sort of round it out to see what we're doing. Just for your general information, yesterday's high in Apple was $6.18 per share. Now, the reason why that's important is from the high from $6.44 down to the low, I believe at $5.55 or just a little below that. The exact number of the 78.6% retracement, which is the square root of 0.618, is 617.5, and the market made 618, and so far has not gone above that. As a matter of fact, I was actually I thought something was wrong with my quote board today because I saw red on Apple, and I didn't think that was possible. But anyway, it's down a little bit today. That doesn't mean it's going to end there, but that's what it's looking at. Let's start out with the silver market, and that is we had yesterday we were watching that 61% retracement while I was doing the show at $30.50 per ounce, and we broke below that. We went 0.5% below. We went about 30 cents below that. Actually 40 cents below that level, which is less than 0.5%. And then, I mentioned at that time, the only way it could become bullish is if we were to turn and close above that number. And we, in fact, did, and we closed at, I believe, 30.70, and now we're starting to move up. There is a pretty strong probability here that we might have made, a major bottom here in some of these metals. We're looking at, the first one we're looking at on Tiger TV, of course, is the silver. And it shows that, we've had a move down of several months, and we stopped not exactly at the 618, but very, very close. Yesterday the gold could not break below the level that we were watching, and that was at the 626 level, and that is, in fact, started to move higher also. But the ones that have my interest are the XAU, which is the gold-silver index itself, because we have hit a really massive long-term, butterfly pattern down at this 159 level. We're 3 points higher than that. We're down a little bit today because of the overall market. And what I'd like to do on this before I, issue a buy signal is I want to see, how it reacts, if we do get a correction in stocks here in the next few days to see if it falls down. The reason for that is this index has been so much weaker than the rest of the stock market. It deserves respect, and so you've got to be very, very careful. Now, it's completed a beautiful ABCD pattern going back from September of last year. It's also completed an ABCD pattern from December through April of this year, and we stopped right at the 1.27 level. In a long term, on the long-term weeklies, we are still on the upside, but still I would like to, wait a little bit. A little quiet pullback here for a day or two. And believe me, these could go up with the rest of the market going down, because if they went down with the market going up, they could easily, reverse and go the other way. So we want to keep a close eye out on this XAU gold and silver index because it looks very, very very, very interesting. I also want to take a look at the SLV and the GLD. I don't look at the ETFs very often. Let's be realistic. I never look at the ETFs, so I should take a look at the SLV and we can see if there's given us an indication for silver, and then also the GLD for gold. But before we do that, we want to take a look at the gold bug index, because it also has completed two major AB equals CD patterns. And if you get a chance to go into Tiger TV and look at this gold bug index, you'll see some of the most beautiful patterns that we've talked about. You see butterflies and gartleys just everywhere, going back the last 2 years on this stuff, and it's just really amazing. And we had a pretty good bottom 3 days ago. We've had a little bit of a pop up, and so what we're looking for now is to see if the market will back off really quietly here for a day or two, and then we don't have to risk very much. And under any circumstances, we should not risk under whatever the low was, on Monday, because that market gap down, it's rallied up, it's filled the gap, and so this is what we're waiting to see. I'm just being cautious here, because overall I'm still bearish the stock market. I think we're just having a big AB equals CD snapback rally, and so far that's what's occurred in the Dow Jones. We haven't, and we made it exactly in the S&P 500 index. Also, we made a little bit higher in the Nasdaq, but that was due to the Apple. So we want to keep I guess this is my moniker, is when I say want to keep an eye out. I'll try to think of something else to say instead of that, because it gets annoying to myself that I get into a habit pattern of actually doing this. We're going to take a look at the SLV now, because this is an ETF that trades very equal to what silver does. And if you'll get a chance to go into Tiger TV, you'll see that it has done a pretty good job of doing the same thing that silver has done. And if you'll give me just 1 second, I want to update this, because I haven't seen it in quite a while. It didn't take very long, so that's good. And it did the same thing that silver did. It went a little bit below the 618 retracement. Now on this one, the difference was a lot less, because the 618 came in at 2968, and the low that we had was at 29 at 20, so it was only 40 cents away, and we're now trading up at around 30.28. So the SLV did actually hold up a little bit better than the silver contract. But that doesn't necessarily surprise me, because silver as a future really jumps around quite a bit. And we had a 5,000 increase in open interest yesterday. That means that there were 5,000 new players coming into the market. And so that's a first good sign for silver, as the fact that the market turned around and held up relatively well during this time. So we'll see if this is going to continue to do so. Now with the GLD, I'm going to show what's happened over the last several months here, the last 6 or 7 months, because we stopped exactly at the 618 retracement again yesterday, and that was when gold was trading down at the 626 level. We were trading at the 158.40 level, and so that was also telling us that it was coming in at a higher bottom at the 61% retracement, and the ETFs there would have given you a relatively low risk entry at that point. So this level that we hit yesterday is very important in gold. Of course, I've already mentioned that at 620, 625, 622. Yesterday's low was 626. So after the big rally, it's shown that it's made a higher high, a higher low, and that the market has a tendency, to make itself go higher once these higher bottoms, are occurring. Now, if we think about this just a second, and this is, I think, as important as common sense. Why have the silver and gold stocks been down so much with the rest of the market being up? I mean, they have literally been going straight down with the rest of the market going straight up. That has to do something with supply. I don't understand the supply and demand part of how these stocks work and anything, but that's what scares me, other than just saying let's just buy it now, because our risk is below the low of just a day or two ago, which would be on Monday. So that's what we're facing when we're looking at this, and I think that this thing is making a pretty good bottom. I'm not 100% sure yet, but there's a couple things that actually scare me, and one of them, of course, I've mentioned already before, is the fact my overall bearishness in the market. We're having this monster rally back, and if you go back and look at the charts of other years when we've done this, we've had the same type of monster rallies. And, this is what's going on. Now, because this is the commodity hour, I always talk about, the DBA, and that's the ETF for the commodities. And, we have broken below the 61% retracement in December that we looked at. We made a nice Gartley at the 2,800 level. Excuse me, 2,800 at $28 per share. And now we've gapped down. We had a little tiny rally of a few days, and it just didn't do anything, and it just literally gave up, and it's not rallying at all. So this is another indication that you got to be very, very careful in any of these, because until there's some strength coming in some of these commodities. I mean, crude oil is holding up well, and gold is holding up well, but and the grains, the soybeans are holding up well. Those are the three big ones. But some of the others, have really gotten massacred, really badly, and that's why we have to be, really, really careful here. On the second part of the show here, I want to talk a little bit about the market in soybeans, because we've made some major long-term weekly numbers in the soybean market, which is one of the larger markets in our agricultural section. It's just under corn. Corn is by far our biggest agricultural product, followed by beans and then by wheat. And so this is one of the things that we're watching as we look at these things. Now, since we're still in with the gold contracts and things, I wanted to show you what I'm looking for. I'm going to pick up Newmont Mining, because I think it's one of my favorite old time stocks from my days back at Drexel. Used to trade that all the time when I traded gold. Anytime we could buy anything that was related to gold or silver, we used to do that. But that was a no-brainer back in those days. From 76 through 1980, all you had to do was buy gold. It never had more than a few-week correction, and usually the upswings were much, much stronger than the downswings. But if you get a chance to come into Tiger TV and take a look at Newmont Mining, what you want to be looking for is a buy here in the next few days if we back off just a little bit. We're going to take a break here, and we'll be back, 877-927-6648.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
This segment is brought to you by Great Panther Silver. For more information, just click the Great Panther Silver banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and thanks to Nick in Nashua, he alerted me to the fact that DBC is a much broader and much better traded ETF for commodities, and so I posted that, and as you can see, it is much stronger than the DBA, and I understand that the DBA has more of the meat complex in it, and of course with what's happened to cattle, since the high was made, several months ago, that's the reason for the breakdown. But I also know that DBA has some other things in it, so the fact that it's breaking down is still important in my view. So we have to, just be sure that we are watching it. Let's say that's what we will be doing. Now, on the next one, what I'd like to do is I want to show you. I'm a real believer in ratios and Fibonacci numbers, as you all know. But I'd like to show you, what we used to call sugar the sweet, and these are the sugar futures that we're looking at on a daily basis. And you'll see that we had the big Gartley form down at the 786 at $23 a pound, and then sugar rallied to a perfect 61% retracement. We had lower highs, and it stopped exactly at $26 a pound, and has now dropped over 25%, and is trading down below 22. It's at 21.31 right now, and gapping down badly again. The thing that was the real tip-off was last week we gapped below the 786 number. It was not the commodity show day, so we weren't able to see that, but that's the important of the thing. The reason why I'm bringing this sugar up is not just because of the daily chart. The main reason I wanted you to see it is to show you, what it looks like, on the long-term weekly. Because on the long-term weekly, there were two major swings that occurred. Folks, we're going back over 27 years in sugar. And this is really it's an amazing chart. I'm going to post this in. You guys take a look at the ABCD and the fact that it stopped exactly at the 61% retracement. It dropped $15,000 a contract and went to the 786 and dropped another $15,000. And we've got a call from Rick in British Columbia. Are you there, Rick?
Hey, Larry, how you doing?
I am good. How are you?
Not too bad. I grew up in Canada, but my parents grew up in Holland, and yesterday there was some austerity talk in Holland and all this kind of stuff. This year, we keep hearing it all the time, but that their economy is I think thought of as being fairly stable in Europe. So now, like they said, if the bigger ones are having trouble, and not that it's a huge economy, but I mean, but anyway, I'd like to look at the euro.
Sure. Now, I've been watching the euro very closely because last night triggered an important spot as far as the numbers that we've been watching for quite a while, and we went up to this 618 retracement up at the 132.44 level. We hit I think 132.60 is what we made in the overnight market, but it just didn't go any above that at all. And what's really amazing is that the fact that it should have just accelerated like crazy at that point, and it didn't. And believe me, I'm having a technical problem now. I'm trying to line up the chart so that I can post it into the room so that you can see it, because there's a really nice 5-wave reversal at the top, and that's why I have to be bearish on the euro. And if you'll give me just 1 second. I'll be. By the way, I wanted to mention to the folks here that there is a election coming on in France, and they have a referendum. The lady who was the daughter of Jacques Chirac it's really amazing that they are going to put a tax of 100% on anybody making more than $462,000 a year. And this means that after that you're working for the government for free. I don't know many people that want to do that, but I hope it's not that bad in Canada. But boy, it's pretty dismal. Anyway, if you'll take a look at the euro chart that I put into the den, Rick, you'll see that we've basically completed a 5-wave reversal back on the end of February. And then from that time, we've actually got a head and shoulders pattern that's in this. And now we've had the third declining top, which I think is today because it was a 61% retracement of this. And so we have a pretty good chance of the euro beginning, a sell-off. And that, if it's been running with stocks, so that could be another reason why stocks might, have a sell-off. But that's what I'm seeing. I think we're ready to move down.
And for some people that can't find the euro, just look at the FXE, and it has the same thing. It trades 50 cents lower than the euro, but
please stay with me, okay? And we'll get back to this after the break. 877-927-6648.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations, including price targets and price stops. As recently as March 21st, Market Insights subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, Your Ultimate Trading Mastery System, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and Forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back. Rick, are you still with me?
I am, yeah.
You should get a gold star for alerting me to this FXE, because it is really a beautiful pattern. And as I posted it into the Tiger TV, you'll see the pennant that's there with the lower tops, and defining it with the futures. It's really an easy thing to trade as opposed to the trading the Forex. I mean, it's probably like watching butter melt, but my goodness, it really follows the patterns amazingly well.
It is. It trades. I watched the Canadian dollar, and it's called the FXC, but the FXC traded 50 cents lower than the actual Canadian dollar futures. And so I mentioned futures here because I don't know what, I think that's what we look at on the euro too. So, but anyway, you put it on a monthly, for example, boy, I'll tell you, it's got 120 written all over it, and that's why it's pretty hard to be real bullish on gold at this point in time, even though you can, like you'd mentioned 3 or 4 days ago, we give you credit for that. You mentioned to Tom, you thought that was a buy. You didn't say it was a buy, a long-term buy, but we've had a fairly nice rally off the bottom, and if this euro goes to 120, it's going to be, unless there's some other reasons for gold to go up, you would think that gold's got to pull back a little bit more yet. But
well, it held that support very strongly, but remember, $30 in gold isn't much anymore. We watched it yesterday drop $25 when I was on the show, and then it, as the show was ending, it had rallied back and gotten the whole $25 back. Plus, it's gotten another 15 today, so it does move around quite a bit. Silver hasn't moved as much, but that dollar index, that euro index, that FXE, compared to the euro, if you can, people look at that and can put it in their IRAs and stuff like that, that's a nice thing to trade, because if we break below that lower part of that pennant, it has at least 120 to 118, written all over it, and we've had a very meager 8-day rally. I mean, it's really gone, it's gone from 130 in the euro to 132 and change in 8 days. So that's not a real strong trending thrusting market yet anyway.
If you put it on a 3-year monthly, for example, it's pretty clean.
Mm-hmm.
That it's got volume sitting down there at that 120. You know what I mean?
Oh, sure.
Yeah,
there's something big happening
quarterly.
in the world.
I went quarterly actually, but anyway, monthly. Monthly it tested that the month before on slightly less volume, but then if I put it on a quarterly, it's got huge volume sitting down there, and it'd be interesting to see what happens. That's for sure.
That's for sure. Well, listen, thanks for calling in, Rick, and you speak very good English for someone from Canada.
Thank you very much.
All right. My wife's Canadian, so I just got hit in the head with a pot. So
where's she from?
She's from Toronto.
Oh, okay.
Yeah. Okay, thanks for calling in.
Bye-bye.
Okay, bye-bye. Okay, the next thing we want to talk about is news in the market. And, we've had this pink slime in the cattle, and then we also had the mad cow disease. And yet the cattle have only gone below the 618 by just less than a 0.25%, much like what silver did. And the last 2 days, the cattle have rallied, several cents off of the 618. So that's telling us that this bottom in cattle might be, a pretty substantial bottom. And it looks like, the rally might have started. So what I'll be doing is watching to see if we can get a little pullback here in the next day or so to buy a retracement in cattle, maybe around the 117, 60 per pound. Now, what's interesting about 117.60 per pound in cattle, if you relate to that back to the late 70s when Jimmy Carter was president, the problem was that the housewives were picketing about the price of beef, and believe me, the price that they were picketing at was 85 cents a pound. I remember that very clearly. And here we are at $1.18 a pound, and you don't hear any complaints at all. And of course, we don't have any inflation. They said that the Fed goal of 2% was good, and I'm sure that no one at the Fed has ever been to a supermarket or has ever stopped at a gas station, to get gas or anything like that. But you have to remember, the reason why I'm bringing up the cattle is how the news reacts is very, very important. We've had two major things hit cattle recently. One is that pink slime, and we already talked about that because that's what gives hot dogs such a great flavor. And then we also have had that one cow that died. Now, if there were a whole string of cows that died, maybe cattle would have broken a lot more, but in fact that has not happened. So we're in the process of seeing what's going to happen to the thing before it moves on to the next thing that we want to look at. Now, I want to take just a brief mention here to the natural gas market because we're having a really strong move here on natural gas. We've been waiting for a bottom down at around the 180, 185 level. We got to 191. And right now we're up 20 cents higher than that. Whether we missed the bottom in this one or not, I'm not sure. But because it's such a strong downtrend, and we've been in a 20-year move to the downside with huge rallies, of course, because we were at $15 a cubic feet, back in 2006. But the important thing is that it's made this big AB equals CD pattern. Going back from 2005, and we went down to 2006, which was a 786, and then we rallied up to the exactly 786 retracement in 2008, and then we totally collapsed to where we are now and have completed a butterfly pattern, if we have in fact completed it. So what I'll be watching now is after this big move of 20 cents, what we want to watch will be for the first Gartley on the hourly or daily where the market makes an AB equals CD move, much like we did in the Japanese yen. And also, we had the same thing happen in Apple, but unfortunately, Apple missed our target by a few bucks before it went to the upside. By the way, everybody that bought Apple yesterday has a loss because the market gapped up, and we're trading below the low of yesterday's low already. So everyone that had bought Apple and all that incredibly bullish news now has a loss. Whether that means anything or not, I do not know. All I know that it's important. Let me give you a little bit of old history from what I remember. Back in 1993, there was a man named John Merriweather. He had been with Salomon Brothers in the junk bond department. And, well, it wasn't junk bonds, it was fixed income bonds, and he was involved with a scandal there, and he was let go at Salomon Brothers, and he came back with a hedge fund called Long-Term Capital in 1993. And he put together some Nobel Prize economists. One of them was the Scholes guy from the Black-Scholes model, and I think the other guy was named Menton or Mentor or something like that. And they basically put together a mathematical model that actually just could not lose. And in the first year or two, they were making 40% a year. And they started with $10 million, and then the money came in the billions. And in 1998, everything went bad. The mathematical models stopped working, and the Federal Reserve actually had to come in and bail them out because they had so much liquidity in the market that they were unable to get out. And if the Fed hadn't helped them, it would have shut everything down. And so they were bailed out, and it eventually was liquidated. So we'll see. Uh-oh, there I go with the we'll see again. But this can happen to anything. I mean, I've watched this happen to Brunswick Bowling Alley. I've watched it happen to national video televisions, back in the 1962, 1963 when color TVs were just becoming popular. And I know Apple's the greatest, product in the world. We already know that. But, things can go bad. Look at RIM. I mean, RIM was a perfect example. Everybody thought BlackBerry was the greatest thing in the world, and look what happened to it. So things can go bad. Maybe they'll, make a mistake somewhere in the marketing along the way. I don't know, but we'll have to look at that. Now, the next one we want to look at is the soybean market, and what I'd like to do is to show you the soybean meal market, because that's the one that I really think, well, I'll do the soybeans first because we have a potential for a triple top that we've talked about before. And you'll see that going back several years through 2008, so we're going back 4 years, you'll see that we've made three tops at the 786 retracement around the 14.60 per bushel level in soybeans. And this is very important for a couple of reasons, mainly because it's the triple topping at the 786, but there's also some strong cycles that are related to soybeans that are occurring starting today that go all the way out to next Saturday. In other words, anytime in the next week, if we start to top, this is what we'll be looking at as a potential, for a move to the downside. And it's important in a text of looking at it as for a really long-term trade and making it something that looks good. Now, we have a call from Roger in Washington. Are you there, Roger?
I am, and good morning to you.
Good morning. What can I do for you?
I'd like to for you to take a look at CRX.
Okay, could you tell me what that is?
It's a commodity-related index, and I'm not quite sure what's in it.
Okay. I'm not even getting any data on it, so give me 1 second here. I'm going to try to CRX?
Yes, that's correct.
I'm not getting data, so there must be a dollar sign in front of that. Give me 1 second here, and if I don't get this done, I will get it done next week. But, no, I'm not getting any data for it, so I don't know why the... I would tell you, if you'll drop me an email, Roger, I'll look it up for you. But I just don't have it in my database.
Yeah, it says a MS Commodity Related Index CRX, and then in quotes it's NA.
Oh, NA means not available, is what it means in my.
What does that mean? Not available then?
That means it's just not available to be traded, or no data is available. That's what it means. That's what it means in my quote system. And I have two quote systems. They're both giving me the same thing. I haven't looked it up on Yahoo because we're in the middle of the radio show, but I will do it later. But if you'll drop me an email, Roger, I'll be happy to work through because I like to find out as much about some of these things as I possibly can. And
I don't know whether it's just commodities in general, including metals and agriculture or what. But.
Well, there's a lot of them. There's so many ETFs, and that's why it's difficult. Someone just mentioned that it means North America, if that's the case, or maybe it means not Asia. I don't know. What I'll do is I will look at it and try to find out what we're looking at. But drop me an email and I'll get your answer for you. And next Thursday I'll get on the show and we'll talk about that.
Okay, what is your email address?
It's just Larry@tradingtutor.com. TRADINGTUTOR.com, and you can reach me there.
Thank you.
Okay, yeah, thanks for calling in, Roger.
You betcha. Bye-bye.
Okay, getting back to the soybeans. Now, when you have a soybean, it's it grows in a little pod that has 2 to 3 beans in it. When the crop's really good, it'll have 3 beans. When the crops are bad, it'll only have 2 beans in it. And they crush these, and what they do is they crush the beans into meal and oil. About 75% of the product will be soybean meal, which is used in feed and tofu and stuff like that. And then the oil is the vegetable oil that we all use in our cooking, and it is one of the more popular products in the world. It is one of the most perfect foods in the world because it is a perfect combination of proteins and fats, and it doesn't have any carbohydrates in it. The shells themselves are also used for other things. In other words, the whole plant is used. It's a plant that was in China, and Henry Ford brought it over here to the United States in the late teens, 1919, 1920, because every car that he had was black because he couldn't get enough lacquer in his paints to make colorful paints, so he needed an oil-based paint, and he found out that the oil in soybeans was the best for paint. And that's why we have these big, colorful cars today, is because of Henry Ford. And let's get back to the soybean meal and the fact that the meal on a long-term weekly basis has 3 lower tops. It's also made a beautiful AB equals CD pattern up here at this $420 a ton. And this is a very significant level since we've only been a little bit higher than that twice in the history. And so we've completed a major pattern in here. We think we have a time cycle coming in here in the next week or so. So we really want to be watching, what's happening with the beans and the meal. That'll be one of our key things, much like we did when we were watching cattle. As it was topping up there at that 131 level, we kept focusing on it until it finally got to our spot. We want to keep watching this because beans are great to trade. The margin isn't bad, 2,500 to 3,000 usually. The volatility is great. The stop placement is good. They have overnight markets. So all these things are, I think, important. We'll take a break here. We want to get back to the bonds because Mr. Bond is ready to play, I think.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
And very happy.
Well, I appreciate it. Now, did you sell us jewelry or did you buy coins off us?
I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and I wanted to highlight the Treasury bond chart because yesterday was a very important day. We went down and matched the 61% retracement of the low we made 2 weeks ago to the exact tick down at 4,100. That gives us our second higher bottom. Remember, we had one at the 135. Now we have one at the 141 level, and we've already exceeded to the upside the 786 retracement on the day. So all it needs to do now is to get above the 143 level. And folks, between 143 and 149 is a very, very short distance, because we covered 135 to 142 in a month. So that means that if this thing starts to accelerate, rates should start to come down one more time, and that could be the one that gets it up to this level that we're looking for in the 140, 149, 150 level. And the long-term, 30-year chart is very, very important. Now, I've been asked to do something that I usually don't do, and that's to vote my opinion on economy. And someone asked me what I really thought was going on in the economy and what's with these markets. And this is my assessment. And believe me, I am a technician. I am not an economist. My master's degree is in finance, but I spent it all in statistics. I spent very little of it in economics, other than reading Keynes and a few of these other guys. But frankly, what I think has happened is I think Mr. Bernanke has made a tactical error. I know he's a very scholarly man and everything, but he's never really worked for anybody else. He's never traded. And I believe what's happened is he has all this power, and he's used it to bring out all this money, this debt that we have to eventually, get back in there, and to try to save us from a normal recession. When I was a kid, we used to have recessions every 4 years, like clockwork. I could remember, my senior year in high school, my dad didn't work the whole year because we were in a recession. And, he's trying to keep us away from the business cycle that is normal, because it, cleans out things that are not working, like Citibank. I mean, there's a bank that should have gone under, and, I'm not going to go into that. But anyway, that's what I think is happening. Now, he's a whole lot smarter than me. There's no question about that. I'm just looking at it, as a technician, and the fact that he's added all of these funds into this. Greenspan was no different. All he did was he was basically a puppet for the big banks. His best friend was Bob Rubin, and when Rubin got into trouble in, I believe, 1989 with when he was at Goldman Sachs, I believe, they had a $4 billion loan out to Mexico, and Mexico defaulted, and the U.S. Treasury, who Rubin was now Secretary of the Treasury, they reneged on the loan, and so the government paid Goldman Sachs so that Goldman Sachs wouldn't lose any money. And so, these are the games that they play. We have to get used to that because they're played all the time. That's my opinion, my 2 cents worth. It probably means nothing, but that's what I think is going on. Eventually, if I'm right, it's going to have to unwind, and that's where the problem is going to have happen. But, I don't believe the statistics on the inflation, even though housing prices are way down in some parts of the country. But if you look at food and energy and the things that we use most every day, these things have gone through the roof, and, we'll have to see what's going on. They also saved our auto industry, which we absolutely had to have that because that's our major manufacturing. But, some of the other things, I don't think we should have. This, cars for clunkers and things like that. No way. Anyway, everybody have a wonderful day, wonderful weekend, and I'll see you all folks on Monday. Thanks a lot. And may God bless.
Great Basin Gold is a mining company engaged in the exploration